Inflation accelerated in May as the war with Iran pushed up prices, and the problem turned out to be bigger than just gas at the pump. The Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Price Index, rose 0.4% in May. That put annual inflation at 4.1%, the fastest pace in more than 3 years. The Bureau of Economic Analysis released those numbers on Thursday. Now, the war with Iran is clearly the headline driver here. High oil prices rippled through the economy and pushed that overall number up. And there is some reason for cautious optimism. Since the US and Iran reached a deal to end the conflict and reopen the Strait of Hormuz, oil prices have come back down. Many forecasters think May end up being the peak inflation month for the year. But here's what makes this report harder to brush aside. The so-called core inflation measure, which strips out volatile food and energy prices, also rose. Core PCE was up 0.3% in May and 3.4% over the past year. That's a signal that inflation isn't just a war story. It's spreading into other parts of the economy. That puts the Federal Reserve in a tough spot. The new Fed chair, Kevin Warsh, is already under pressure from President Trump to cut interest rates. But at their most recent meeting, about half of Fed officials indicated they actually expect to raise rates before the year is out. Markets are increasingly betting they'll have to act. As one analyst put it, this is simply not a comfortable report for Fed officials. There is a silver lining, though. American consumers are holding up. Spending rose 0.7% in May, outpacing inflation, and personal income grew by the same amount, suggesting the strong job market is helping households keep their heads above water. The inflation fight is far from over, and the Fed now faces pressure from multiple directions at once. That's the story behind Thursday's numbers.